All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. A lot going on out there, a lot of stuff to go and take a look at here. And one of those mornings where we're seeing something we haven't seen all year. We've seen maybe one day kind of like this morning, but a very different style day here for the markets, and a very broad-based type sell-off here as the markets dealing and tackling a lot of issues. This isn't a one issue morning. This isn't a two issue morning. It's not even a four issue morning. There are a lot of issues going on out there, a lot of things for investors to have to digest, and we're seeing that kind of hey, sell first, ask questions later mentality come into play that we see on mornings like this. There just aren't many safety spots, for investors right now. A little bit of utility, a little bit of consumer staples, some healthcare, a little bit of safety net, but no safety net in tech, financials, industrials, energy, materials, transports, zero safety net in consumer names. And so a very ugly morning here for the markets. Now you can see S&P futures, they fell off, early, yesterday or last night, I should say. China came out with a few statements, and it was one of those where, over during this entire trade war or trade saga, we have heard the inflammatory statements come out of the U.S. side, not the Chinese side. The Chinese side has been very calm, cool, collected, very measured in their statements, very measured in how they approach and how they handle the various situations. Last night, we heard a change in rhetoric, and we've started hearing it this week out of China. Chinese premier, basically said, hey, you know what, things are going to be tough here for a while. And he kind of compared what China was going to go through to one of the most historical moments in Chinese history, referred to as the Long March. And I'm not going to go into the details of the Long March and all of that, but basically said they're going to be trying times ahead, due to issues domestically and abroad. And very different type of statement, very different type of language they're used by the Chinese premier. We had one Chinese official come out and say, hey, look, China has to reevaluate their whole trade system with the U.S. And, almost hinting to the fact of, hey, we just may not be able to trade with the U.S., period, going forward, and we'll have to look elsewhere. So very kind of different style statements out of China. We've been seeing it ramped up in some of the Chinese national media here over the last week. And, that escalated again here last night. Then we got to the European session. We saw the European data. Which was the PMI flash numbers, which basically missed across the board. Yes, showed expansion, but very, very little. Some places contraction. Basically showed, hey, you know what? The European economy continues to be in just stall mode right now. Despite having interest rates that are dirt cheap and quantitative easing programs going on, there's no economic uptick in Europe, and that was well confirmed in the data. We'll go take a look at that data here shortly, but that drove the next leg down, and then U.S. markets open, and boom, big drop. Here we go. Now you take kind of the escalation of the trade war. You take oil supplies from yesterday. You take the PMI data that we saw here overnight, and that is just a triple trifecta for oil. And it says oil bye. Oil down $3.50. It's going to be one of the worst days for oil in a very long time. And oil, think about it yesterday morning at this time. Oil was trading at almost $63 a barrel. It's at 58 right now. In 24 hours, that is a huge shift in a global commodity and the price of this global commodity. And it's going to affect energy, going to affect transports in a very big way there. Okay, so those are some of the stories. Those are some of the headlines that are going on and kind of what is driven, some of this move here this morning. We will take a closer look at some of these here after we go and make the challenge decisions here this morning. Now, before we do that, actually, let's just go. Let's take a look at S&P futures. ES, this is the type of day where you can see some bottoming volume. And what we saw here is the bottoming volume come in 15 minutes into the market open. Now, typically bottoming volume comes in after the first hour. But with everything going on, to say, hey, the markets are going to close below this level, it would be very difficult for the markets to do, given what we have seen. So it's ugly out there. It's kind of a train wreck out there in a lot of different ways. But to see the market close below this level is going to be pretty tough here on the day. All right. All right, so let's go take a look here at the challenge. Now, there are a lot of possible entry triggers here today. None of them confirming here this morning. Some of them confirmed, and for instance, IBM, it confirmed this morning when I pulled the data 15 minutes after the market opened. It confirmed. But right now, it's a wait. Why? Because it's moved too far too fast in the short run, and something that something where we've talked about it before. The algorithm is tuned to where it's not a big chaser. It's not going to chase the biggest moves, especially when you go and look at a stock and it's in this type of position, and some of the biggest moves are followed by some strong rallies. And it has to be that way. Why? Because on the sell-off side, what happens to the implied volatility? Right? The implied volatility skyrockets on these types of moves. So if it were just an algorithm tuned to stocks, it would be something where, okay, you know what? Chances, path of least resistance going forward is going to be lower. Let's go. And all right, if there's a little bit of uptick here and there, it's not going to matter all that much. With an option, that's just simply not the case because of the implied volatility, and we have seen the implied volatility across the board surge. So when the move is a little too dramatic, like what we see in IBM this morning, it's going to hold off on its signal. Now that could change this afternoon. But, that is typically what we see. And, one of the yes, we could take that out and we get a lot more signals. But from an option standpoint, it wouldn't add value to the signals overall. So we have a lot of these. We'll take a look at some more of those that are like IBM. But we have to go and make a decision here with JNJ. And JNJ here, we entered at 138.60. And right now, the stock price on JNJ is 138.46. So the stock price is down 14 cents. One of those where, it's in the red. Now, there's something very interesting with J&J. And I was up at 3 o'clock this morning because I thought, man, this scenario could happen. I looked at S&P futures and I looked at J&J and I said, this scenario could happen. It's one I knew could always happen, but I never really, kind of said, okay, I'm going to account for it this way or that way because it is so rare. And I have over 600 trades worth of data that I can go back to, to say, hey, you know what, how did this play on out? What all happened in these scenarios? And out of those 600, it only happened 3 times. And what is that? Well, the algorithm for the challenge is built around stock trading with a few little option additions thrown into it, like we just talked about, to kind of, foster option trading a little bit better. But the stops, the exit levels, profit levels, it's all based on stock. The entry signal based on a stock price. The exit level on the option based on a stock price. The profit level based on a stock price. Okay, it's all based on a stock price. But what do you do in this scenario where the option is red, but the stock price is green? Now, we're not quite in that scenario, with it. We could, with just a 13-cent rally, be in that scenario. But what do you do in the scenario where the option price and the stock price did not move in the same direction? We're showing conflicting signals. And like I said, it only happened 3 times out of 600 pieces of data. Over 600 pieces of data. 3 times. So what does that mean? It means there's not enough instances where it has happened that I can take a look and say, this is the way where statistically it proves more effective or not. And so, as we talked about, while all trades and entries follow the algorithm, Jeff can step in under unusual circumstances and change a trade. This is one of those unusual circumstances, and I apologize for my spelling of algorithm. Let's see if I can spell that right there. Algorithm, there we go. But can step in under unusual circumstances and change a trade. And so, that leaves me in a position of choice here this morning, and to say, okay, you know what? Do I hold JNJ? Do I pull it off? Do I take that risk or not? When it comes to the option, you'll see the option's down about $50 here today. We're seeing a little bit of implied volatility come back here to the option. I still very much like the chart. I think this is still one of those stocks that has a good chance of moving significantly higher. And you know me, historically, if I have a choice to hold or to hold or not, I tend to choose to hold. And so what I'm going to do here with JNJ is I'm going to hold it right here. Okay? I'm going to hold it right here. And I'm going to wait until the close. If we are, so I'm just extending the time out one instance here. Instead of being 5:23 a.m., shifting it out to 5:23 p.m. just because of the unusual circumstance here with that. We won't see this happen very often. Like I said, it's only occurred 3 times. And technically, it's not occurring right here. And I know you can make that argument, and I can't argue against, just going out and selling it, moving on. But I'm going to hold it here to the close today and just kind of see what happens here with it. Is it a little bit of a risk? Yeah, it's a little bit of a risk, right? Is it going to make or break the challenge? No, not at all. It's not going to, crater the challenge. It's not going to, put the challenge in a new stratosphere. It's really not that big of a decision. But that's what I'm doing here with JNJ. So unusual circumstance, and gonna run with it here that way. Now, let's go take a look at some of the other things that are going on out there. And my notes are quite long here compared to other days. Micron. We saw earnings estimates lowered here today by an analyst. This is something where we've talked about I was asked last night, where do I think a bottom on Micron could be? I know Micron's a popular trade stock and everything else there. But yesterday we talked about the bottom in Tesla coming in on big volume. The way that Micron is trading, to really say, hey, bottom's in, we probably need to see 80 to 100 million in volume come into it. Right now, it is just in an absolute distribution stage or sell stage. And, if you back this out to a weekly chart, it is one where Look, I mean, it's lower high. Just in 2016, this was a $10 stock, rallied to 60. To see it go back to $10 is not a big stretch. Take a look at it historically. This is a stock that makes monster moves. 37 down to 10, 5 up to 30. This is a stock that when it goes through heavy trends, those trends can last for a long time and can take the stock to levels that are kind of unthought of before kind of looking at it. Right? You look at Micron at 60 and you go, man. How many analysts put price targets over 100? Yeah, quite a few. But we now see analysts cutting estimates, and rightfully so. And look, we saw weakness in this market before the trade war, and now the trade war's here. We're seeing that continued weakness. Here with it, AMD's held up significantly better than Micron. Those huge volume days to come in it. The circumstances behind all of that, there's just a complete shift here. Just an absolute monster shift here. I'd love to see these things rally a little bit to be able to having one of its worst days here today, down 5.5, and be done with it. But we have this African swine flu going on. It's killed over 200 million Chinese pigs. It's the type of disease that affects both wild and domestic, something that can be real, right? Chipotle. Now, ultimately, what is this? This is an earnings. And then we see numbers out of type of thing. The stock will rebound and go back to new highs. If we see the revenue shrink, then it's only going to exacerbate the problem here with it. But I look at this as a pullback opportunity for Chipotle to ultimately be bought, but it's too early. There's not a solution to the issue. There's not a solution to the problem. U.S. pork exports are rising dramatically right now with the pricing, but this is affecting some other companies. Here's Hormel, big gap down here today on some of the downgrade news from analysts. But again, it's not new news today. This is news that came in this week. Has been going on now for several days. But we see Hormel ultimately rebounding, but it is one of those things where it's not a long-term structural issue for most companies. It's a short-term type of thing, and so the dips that these companies get on it are likely to get bought up when it comes down to it. And so what do you wait for? You just wait for a technical signal that you want to see. And when you get it, you run with it. And it's these types of things that create, some of the dips that, quality stocks, need for investors to jump into on a pullback. So, Chipotle being affected by that, we're going to see other companies. Well, we see other companies like Hormel being affected by it. But it's one where is most of it already priced in? Yeah, maybe another day or two to price the full extent in, and then it is done there. Okay, now flash data. If we come in and we take a look at the data here last night, and I mentioned, the way this data goes, we'll probably see the market gap that way, and we did. Here's Germany, where the services level missed and the manufacturing level missed expectation and consensus, and both of them contracted compared to April, yet there's a math error here as the actual shows it came in above. But that's a little difficult to do with the composite when both services and manufacturing miss. But, just that incredibly sluggish with manufacturing continuing to contract. It's an ugly piece of data there for it. Here in the U.S., we saw the PMI composite number here. But you see down at 50, I mean, it's a huge miss. mean, this is a huge miss. 52, 52, kind of that's where we've been. Contracting into the 50s, yikes. Um, that's, yes, still growth, but, what? The number's a 3-year low, right? A 3-year low with job growth at a 2-year low. So it's a pretty ugly number. There's no other way to kind of slice and dice it. It is a very ugly number when it comes to manufacturing and comes to services, and that is one of the reasons why we're seeing the market do what it's doing here today. Housing, home building, has held up, but you still see it's kind of been new home sales have been contracting. Some of that's a little seasonal, but we should start to see it rise here a little bit. But higher mortgage rates are definitely impacting the market here, but we see some of the home builders, just holding up and actually doing pretty well here today. Things like KB Home, which opened in the red, now pushing back up into the green here today. Some of the falling lumber prices. We heard Home Depot talk about lumber prices falling in their earnings. Some of those falling lumber prices are a positive here for some of these home builders, and for what they are doing there. Okay, so that's the data. It's ugly. It definitely puts a very negative spin on an idea where we saw April uptick a little bit. Does that carry momentum? Absolutely not. And in fact, the contraction in the services and the manufacturing numbers it is kind of startling here for the market. So that's another issue that the market has to deal with. Now, for the challenge and some possible signals, we have a lot of 3-7 crossovers happening on the watch list right now to the downside. We have things like Boeing. What does Boeing have? Well, it has the 3-day moving average crossing down below the 7. Right? It's in the same position as IBM this morning, though, where the move is too much to say, hey, you know what, this is going to hold up today and enter this morning. It has the inflated option value, and it has too much short-term, upside risk associated here to it. But could easily be a trigger by the end of the day. Chipotle, same thing. Exact same thing. Chevron, same exact thing. IBM, we already talked about this one. Microsoft. This is one where has that 3-7 crossover, but you can see it's still trading, well above 50 on the stochastic, so chances of getting a trigger are pretty slim. But does have a 3-7 crossover. Raytheon has that 3-7 downside crossover, or had it. It's being erased here right now. But too much short-term, entry risk to trigger here this morning. Twilio has some 3-7 downside crossover, but kind of like Micron, above 50 on the stochastics. Walgreens Boots Alliance has the 3-7 downside crossover going on here on it. And Whirlpool has the downside 3-7 crossover happening on it. And you see almost all of these, except for Microsoft and Walgreens, the magnitude of change here is pretty dramatic. And, it's just one of those where the whipsaw risk is pretty high, and the option pricing risk is even higher. So it's one of those where the option pricing risk will not be the same at the close today. So we could see easily any of those close. Amazon. This is one that could trigger here by the end of the day. This doesn't have a fresh 3-7 downside crossover, but it is in a negative 3-7 position here, so could trigger here by the end of the day as well. Things like Facebook, things like Honeywell, the been close to upside triggers, just haven't been there. We're seeing a pullback here today. No real emergence of an upward trend, which has kind of been a theme where, some of the things that have been close just haven't, actually triggered to go. But, there's the type of day where by the close, we could see a lot of triggers here come in and have some fun decisions here to make with that. All right. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.